Hey, this is Scott Cole from besttipsfortrading.com, and I just wanted to give my commentary on today's price action on Friday, September 9th, 2011. And obviously a pretty lousy day for the stock market as we closed down over 2.5% on, I believe, just about all the market averages today. This is the S&P 500. And it closed down over 31 points and down about 2 2/3%. And just checking the NASDAQ quick, yep, it was down a little bit less as some of the tech stocks did a little bit better today. So it was down 2.4%. It's interesting to me that the leadership is really narrow right now. So the NASDAQ and the NASDAQ 100 have held up, whereas the Russell 2000 is close to breaking out. That was down 3% today, and that looks like it's going to test its lows pretty quickly. Dow Jones Transports, that looks like we might be forming a head and shoulders, an inverted head and shoulders continuation pattern. This is left shoulder, head, right shoulder. Not a very well formed one, but if we break down below that, we'll go back to the S&P. S&P, I drew a channel a few days ago because we had bounced off the low end of that on, I think this was Tuesday. And then Wednesday we had a nice up day, but I was hesitant to call that a bullish move because the volume was pretty light. It was significantly lower than on Tuesday's volume, and this was followed up on Thursday by a down day. That suggested to me there was no follow through. And of course, we ended up with a pretty lousy day due to Europe and concerns about Greece. I understand short-term interest rates in Greece are about 90% now on a 1-year note or whatever. So this market is in a critical area. It looks like we're getting ready to test the lows again. If we break this low here set on Tuesday at 1140, that would give us a pattern of a lower high and a lower low over the last week. And so the short-term direction would definitely be considered down in that event, and an intermediate term direction as well. So we had rallied, got into an overbought situation back here at the end of August, and now it looks like we've got to test those August lows, and it's going to be critical. Obviously, the market shrugged off Obama's speech from last night, knowing that the Republicans stand in his way, and Europe is basically what's the tail that's wagging the dog right now. So I think I mentioned the other day that the dollar strength is not good for the stock market. The euro is collapsing. That is resulting in a flight to dollars. When we've seen that in the past couple years, the market has not done well. The market has done well when Bernanke was printing dollars and the dollar value was going down. Now, unfortunately, well, however your perspective is, it looks like the dollar is appreciating, and that hasn't been good for the U.S. stock market because it's been the multinationals that have been carrying the weight, and if their profits are going to be hurt by a stronger dollar, they're going to be less competitive, and that means we probably got to head lower in the overall stock market because the economy here at home remains soft at best and recessionary at worst. So those are our thoughts. Next week is going to be a key week, and that's going to be followed by an address by Obama on how he's going to pay for his new stimulus package. He hasn't presented any details on that yet, and apparently he's supposed to come out with some sort of real deficit reduction plan, which he has never done before. So he's obviously in campaign mode, and we'll see how the market reacts. So stay tuned for Monday, and I encourage you to check out our site, besttipsfortrading.com. We got some cool products over there for you to check out. Thanks.